Good day all. Ira Epstein of Linn Associates with your agriculture update, and this is for Thursday, the 21st of March, 2019, about 3:10 in the afternoon. That's p.m. Central Daylight Time. Update. And we keep hearing more and more news about, obviously, China buying more and more pork from the U.S. We suspected that. They keep talking that they are doing that, in fact, and that's driving it. That jumped into the cattle market, where it's now into an uptrend, a nice one. And the grains are acting like they've got the mixture of hope for eventually a Chinese deal, although there's still so much pushback, you just don't know where you're at with it. Yet the stock market didn't care about that at all. The market came roaring back from yesterday. The dollar had a big move back up, but you still held on overall, if you go through the past 2 days, with probably about even in the currencies. It's pretty crazy. But let's take a look at what's going on with the soybeans on a weekly basis. They're up 1 1/4 cents for the week. So this battleground that we keep talking about that's happening at the 903.5 area, and here's the range for the week just so you can see it, 912 to 899.25. You're hanging around the 910 area. So the market did hit that this week, and on a closing basis, it's staying over it. So I'm going to say the bias is still up in this market. Today's action looked good for soybeans. Now you'll say why. The reason is today's high eked out past these highs and you closed in the top part of the day's range. Therefore, what you're establishing, at least in terms of the swing line, is a new pattern of higher lows and higher highs. In order to break this pattern, you'd have to get back under 899.25. In addition, because you've got the higher high, that would not start a bearish pattern. You'd end up with a higher high and a lower low. Very important. The next thing, the market has finally mounted a close, a nice one over the 18-day average of closes, far enough away that if you get a 4 to 5 cent break, at least you have the opportunity for buyers to be trying to be supportive of the market. If you can mount further attack to the upside, 917 is one of the objectives, the 100-day average of closes, and you've got above that the 921 level. Now, this 921 Bollinger Band, if you take a look, it's falling about 3 cents a day. I'm just giving an approximation there. So that number tomorrow could approach the 100-day average. So if one is long, I would be expecting resistance in that general area to start off. In terms of momentum, you're not overbought. So here's my definition. Momentum pointing up. The bias is up now because you're over the 18-day average of closes. You have the swing line pointing up, so all systems are on the bull camp. In the meal market, you went up to key resistance. Now, if we come back to yesterday, you hadn't done this. I had said yesterday 2 levels of resistance, the combination of the Bollinger Band 100-day average. You are overbought. Today you come up, and that's the zone you're fighting at right now. You're slightly over both numbers, 60, 70 cents over the Bollinger Band, not dramatic. Now the question is, can it mount on that, or is this going to be one of these situations where you get up and you come down? But the important part is that the oil is staying down. And typically, I wish I can say to you all the time, it's not how it works. Typically, when the meal is gaining on oil and beans are going up with it, that's the right part to get a movement in the soy complex to the upside. This market's also down to its key support, the lower Bollinger Band. But you can see you have the embedded reading. This is the leg people don't want. The legs they want are the meal and the bean. In the corn market, it is overbought, number one, so be a bit cautious here. The market did end up yesterday with higher lows. Now you've got the higher high. Today's number did that. I'm looking for the market to have trouble at the upper Bollinger Band, which, if you take a look, is falling about a penny a day. So it's going to be right above the market. Support back at the 370.75. The number I would not want to see taken out if you're trying to mount anything bullish in the corn is getting under 367.75. And like beans, if that happened, you'd have a higher high, lower low, not a trend to the downside. In the wheat market is grinding higher in a very overbought condition, but it's in an uptrend. You've got the swing line up. You've had the bias up now for 2 days in a row. You are very overbought. I would say 475 and 3/4. If you get there, I think the pros would be grabbing it with both hands because you're so overbought. Do I know? I don't know. You're just overbought. Support back at 454 and 3/4. Take out 53 and 3/4. You stop this momentum play. What if you're a student like I am of cycles and seasonals and so on? Actually, I'm talking seasonals more than cycles. This is not the time of year wheat typically gets very strong. In the sugar market, sugar has re-entered the bear phase. You failed at the 100-day average of closes. Today's close at 1250 is under 1251, which is the 18-day average. So I've got the swing line down, lower highs, lower lows. I have the bias down since I'm under the 18-day average, and momentum looks like it's going to turn down. If that all stays this way, then the market as it comes down could be making a run wherever that lower Bollinger Band is. It's around 1201 right now. In coffee, you tried a rally today, got up to the 96.30 level, kept the bear trend alive. You're now running, and this is the word I use for it, running the lower Bollinger Band. It's like a magnet. You go up, you can't get away from it. You come down, you go back over it. That's called running the band. It is very oversold. It is not embedded. So I don't know that the pros will do too much with that one way or the other. In the cocoa, today you got down to what I'll call the objective, the lower Bollinger Band, the way you did here. I think professional money will come out of the market at that number. You've had the lower highs, lower lows. It's almost been a vertical decline. Yesterday you just missed that number. Today you went down and said, okay, I'm here. What are you going to do about me? Cotton market has been hugging this upper Bollinger Band. Let's go right here. You can see it. Backed off yesterday, overbought condition, still overbought, but today it's an attempt at a breakout over those numbers. These breakouts typically haven't lasted, be it to the upside or downside. We'll have to see if weather is part of the play here because there's so much bad weather in the Delta. We'll see if cotton is being impacted by it as we hear more about that. In the cattle market, this is called running the Bollinger Band. You get a couple of days over, you pull back, then you get back to it. That's typical of what this does. What I'm looking at, will you embed with that? Both numbers today over 80. Not yesterday. See that? Not the day before. It's just an overbought condition. Very difficult to trade it. No reason to be short, but I can't find reasons to buy. In the feeder cattle market, this is a breakout of this sideways action. Remember we talked about this. You get sideways action, and it is very typical that when the market moves away, it breaks out, gets overbought. You don't know where it's quite at. That doesn't mean the pros weren't taking money off the table on the first challenge of the Bollinger Band. They typically do. And now the market's in the run mode, as the hogs are, and the hogs just keep getting more information out of China. I read the news wires each day on the meats, and a lot of pork purchases because 30% of the hog crop, that's the word now, in China had to be put under due to the African swine fever. So you've got that, you got Vietnam, so U.S. pork is an item in the making there, so we'll see what goes on. But you've had the embedded reading, and you know, that to me is one of the big keys as to how this works. You know, I talk about all this, but I teach so much more in my morning subscriber video. And for those of you that are part of this already, I've been asked, yesterday I went on and I asked people, gee, what would they like me to do that I'm not doing? And everybody said that, not everyone, but quite a few, get the update out earlier. They'd like it before the 8:30 time frame. I'm going to come in earlier and start doing it. I think it's that important, and I will get them out. It means I won't get the meats in there when they open for the session, but that's about all that we'll miss. The grains won't have reopened by the time I do it. They'll have closed for the first session in the morning, about an hour, but everything else will be humming along. In that update, I'm going to talk, and this is what I do. I talk chart action, I talk ETFs, I go through the market and what I see, the technical and some of the fundamentals, and I throw out trade ideas galore. And I do ask, what would you like done? But you have to be a subscriber to get into this. So the way to do it is pretty simple. It runs about 26 cents a day to give it a try. And then you decide, do you like this or not? I cover now about 45 charts in the morning because I've added ETFs. I'll probably add a few more. And I do it the same way all the time. The sequence is the stock indices, then the currency markets, interest rate futures, the meats, the grain markets, the softs, the energies. I mean, I really go through the whole gambit for you, and I throw out ideas left and right. I'm also now going to start doing those reports that I talked about, and these people will get them first, obviously, but the reports I'm talking about are on the metal markets, the dollar index, it'll be on the grains, and they're video reports now that I'm doing, special reports. I don't want to keep writing. I think video is the way to go. How do you get this? It's so simple. Just go to our website, www.iraepstein.com, go under the word education or research, go to morning subscriber video, give it a try. I'm Ira Epstein. Have a good day.